It's tough out there, y'all. It costs $60 to fill up your car. The average family of 3 spends $250 at the grocery store. Heck, even a McChicken costs $4 now. With everything getting more expensive, a little extra income isn't just nice anymore. It's becoming a necessity. But don't worry, you are in the right place. I build trading strategies. I have built hundreds of them. And in this one video, I am going to give you my 10 favorite. The first strategy we're going to cover is my runner's large cap swing trade strategy. The indicators you will want to have turned on your charts to better understand this strategy are the ATR, or average true range, and percent change. The strategy will enter when the percent change indicator, or the difference in the current closing price from the price it was 14 days ago, that's what this indicator measures, has been greater than 5 for 3 consecutive days. So if I zoom in on this buy here, you will see the 3 previous candles. If you look at this percent change number down here, you will see the percent change was 5.4, then it went to 6.6, then 9.7. That is, of course, 3 days over 5, so the strategy entered on the close of that candle. Then the strategy has 3 exit reasons, all set up around price action and measured by the average true range indicator. The first reason for exit in the normal profit take is if the close of the previous bar minus the ATR multiplied by 2.5. If the current price crosses below that line, you will get stopped out. That's sort of your profit stop. Hey, if there's a massive red day, you'll go ahead and get out at, once again, current bar close minus whatever the average true range value is multiplied by 2.5. You see that plotted on my strategy here as this cyan line. Next, our stop loss is this salmon colored line, and this is if the entry price minus the ATR times 1.5 ever gets crossed. That's our stop loss. Hey, leave the common price denominator as the entry price, so that's why this line is a little bit more flat, just changing by the ATR multiple. And the third reason, and the reason that this trade exited, is if the percent change indicator ever crosses below -10. You will see on this candle that it closed on, the percent change indicator here next to my head is at -11. That's sort of the, hey, the stock is moving down. Maybe it hasn't quite moved down in a volatile enough fashion to trigger our initial profit stop in letting this stock run, but it's moved down enough. Let's go ahead and get out of this thing and lock in our profits. For strategy number 2 in this video, let's stick with the runners theme and let's go ahead and cover my runners day trading strategy. With this strategy, I want you to leave on your percent change indicator, but you can go ahead and replace your ATR with RSI, or the relative strength index, instead. The sort of preamps that this strategy is looking for on the daily chart is that the percent change indicator is greater than 30. So you're looking for something making a pretty crazy move on the daily chart with this runner's day trading strategy. Also, either the average volume must be over 5 million or yesterday's volume must be over 5 million. That's how I make sure I am still there and able to trade stocks that maybe just got big news or something really exciting just happened with the name. And finally, the current bar must be breaking above local highs. Now, with all that knowledge, we can go ahead and look at this ASTS chart and see where we would have been day trading this stock. And of course, I also have scanners that are returning me stocks that are currently over 30 on their percent change. So ASTS began hitting that scanner in mid-May of this year when the percent change started hitting above 90, even heck peaking nearly at 300. Here, it was trading 50, 70, 100 million shares, definitely averaging over 5 million. And these days where the high of the previous candle was breaking over local highs, we would have been day trading it that next day. So now hopping into the 5-minute chart, which is the time frame this strategy is built around. And I have gone ahead and turned on my custom coded backtest data so you all can see how this strategy performed up there. Let's walk through the intricacies of the intraday part of this strategy. Now, of course, everything we talked about on the daily chart must be true. Then what we are looking for is for the RSI to be above 50 and for the stock to be green on the day. So you'll see this cyan line plotted. This cyan line is yesterday's close. So the strategy will only buy if the current candle is closing above that and with an RSI greater than 50. Then the exit conditions for this strategy are either if the RSI crosses over 80, hey, the stock is going real crazy, let's just go ahead and lock these profits, or if the RSI crosses below 40, which as you will see in this instance right here, you can see if I can get my hover correct, the RSI is at 39 here, so it broke down below 40. That isn't always a stop loss, right? The stock moved up so hard, we still made good money in this trade, right? Then, of course, we have a third exit criteria, which is end of day. This is a day trading strategy. You don't want to end up holding overnight. We've, of course, still got a long way to go in this video, but if you're already interested in any of the 2 strategies you've seen, or the other 8 we're going to cover in this video, they, along with over 15 others, along with custom indicators and scanners, are all available for easy import into your trading software on my website, daytradingstrategies.net. Link in the description down below. All right, can we take a small breather with strategy number 3? I came at you kind of hot with the first 2 strategies. My runners strategies are a little bit more complex, but they don't all need to be complex. Actually, I find that often very simple strategies that work in backtesting tend to be the ones that translate to real money the best because you're avoiding overfitting. So the third strategy in this video is going to be my simple MACD swing trade strategy. And the strategy is what you think it is. Turn on your MACD histogram, and when the MACD histogram crosses from red to green, that's your entrance. When it crosses from green to red, that's your exit. On the daily chart, of course, as this is a swing trade strategy, and it's really that simple. And yes, I know I'm looking at the S&P 500. Your initial thought is, Trey, probably just looks so good because this S&P has gone up, I don't know, basically forever. Well, I mean, let's look at some not so hot stocks. Let's look at F or Ford. This stock has been pretty much dead in the water sideways, I mean, for decades, right? Strategy still up $80,000 on it with an average win of 1,800, average loss of 1,000. Pretty dang good. If we go ahead and look at Intel's not been doing very good, for the last even 5, 6, 7 years, pretty much sideways, not doing a whole lot, still up $71,000. Yes, does it perform better on stocks that are very strong? Of course it does. But run a strategy like this on strong companies. I sort of hate the assumption. I mean, I shouldn't say that because it is a fair assumption that, hey, stocks don't always go up. You can't run a back test and expect past performance to be indicative of future performance. While not wrong, why are you in the stock market then, right? All you can do with any decision in life is base it off of past performance, base it off of what stocks or anything tend to do. When you put your left foot in front of your right foot, do you tend to walk forward? Yeah, that's why you do it. When you put your money in strong stocks, do they tend to go up? Yeah, that's why you do it. Do they always? Of course not. But that's why we're active trading. That's why we have tight stops. And I don't know. I'm ranting. That's strategy number 3. That's the MACD strategy. The next strategy I want to cover is a day trading strategy, but it's a very specifically timed day trading strategy. It is my earnings strategy. Now, earnings are public and scheduled. They're very easy to figure out. You can literally just Google search an earnings calendar and you'll know when a company is about to report earnings. So the way this strategy works on the 1 minute time frame, whatever the first candle closes, either green or red, after numbers are announced. So numbers will be announced at the beginning of a 1 minute candle. Then whatever that candle closes, that is the direction of the trade. So Nvidia's most recent earnings, their initial candle closed red. I entered short. Started off very, very nicely. Unfortunately, got a bounce back up. We ended up still making $150 in this trade, but didn't work out the best for us. But anyway, our 2 exits for this strategy are either, let me cover the red exit first. If a candle closes above the close of the previous candle while you are in a position, or below if you are in a long. Essentially, if you're red and the candle is closing on the wrong side of the previous candle, just go ahead and cut the trade. So if this candle would have closed here above the close of previous candle, I would have gotten stopped out of this trade. Does that make sense? Now, the profit lock is also a stop loss because I want to let the moves run as much as possible. I give them as much room to breathe as possible because I have caught in some pretty massive winners with this strategy. And I will admit this strategy does sort of rely on massive winners, rely on the handful of huge ones that I've caught. Oftentimes you will just get chopped around, but if you can catch a handful of those huge ones, this strategy, I've still made money with this strategy. Not guaranteeing you will. Lawyers, SEC, FINRA, don't come after me. But the stop loss for the profit target on this strategy, if you are green, you will get stopped out when the current bar breaks above the highest point of the last 5 bars. If you're in a short, or of course, if you're in a long, breaks below the lowest point of the last 5 bars. So we got a little screwed on this trade because for whatever reason, this kind of gave you like a big false high here. So if it weren't for that false high, like if this high would have been here instead, where it probably should have been without sort of a false print, we would have gotten stopped out on this candle and locked in over $330 instead, right? Because this candle would have closed above the highest point of the last 1, 2, 3, 4, 5, would have stopped us out. Instead, that didn't happen, so we got stopped out on this candle, which closed above the nearest 1, 2, 3, 4, 5. Went ahead, stopped us out for our profit there. Next, let's hop back to the swing trading side of things, and let's talk about my favorite strategy right now. So I hope you all made it to this point in the video. We're going to talk about my reversal strategy. This strategy is very simple. All you need to have on your chart, your 200 simple moving average and your relative strength index. You are going to enter a trade on the daily chart, of course. This is a swing trading strategy. When the daily candle closes one above the 200 SMA, that's how we make sure that we're not buying real downtrend, catching the falling knife, right? And below 40 on the RSI. So we are buying dips on strong stocks. Very simple, right? Now, the secret with this strategy is that you will enter up to 10 times. So if you wanted to trade, say you wanted to trade $5,000, of course, with each entrance, you would buy $500 worth of the stock, because up to 10 times, as long as that stock stays above the 200 SMA and below 40 on the RSI, you will scale in, scale in, scale in, scale in until you eventually exit when the RSI closes above 45. This is a reversal strategy. We're not looking for a lot. We understand that we're buying weakness, so we don't expect a huge move out of it. Now, does a huge move out of it happen sometimes? Yes, of course, but not often enough to make it worth holding in all the back testing I've done on this strategy past the 45 RSI. And I just love this strategy because of the scaling in. You end up with such high win rates, which allows for faster scaling of your positions with more consistent growth in your portfolio, right? Keep an eye on this statistic here, 91% on SPY, 97% on Tesla, 83% on Nvidia, 90 or 84% on Apple. Just amazing numbers out of this thing. Strategy number 6, just passing the halfway point here. Hopefully all are still sticking with me, learning a lot of stuff. Strategy number 6 is my pre-market strategy. Maybe you want to try to get some trades in before you go to work. This is a day trading strategy. We are on the 5-minute chart. Now, this strategy can be a little hard to successfully test because it does require news, and you can't code that sort of event within ThinkorSwim. You can't make the trades only enter when there are news. So that part sort of has to be up to you. You have to make sure there is actually news on this stock before you take the trade. And there's, once again, hundreds of free scanners you can Google to watch pre-market news, see which stocks are getting news. But anyway, this morning at 8 o'clock, ticker CAPR got news. Capricorn Therapeutics announces intent to file biologics license application, blah, 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 blah. You can see the news down here in the bottom of your chart if you can read that. That happened at 8 o'clock. Great. Strategy for this entrance is if the RSI is above 70 and the candle closes red. Idea behind that, we want the stock to have a strong reaction to the news, of course, right? But we don't just want to be chasing that strength. So we're really looking to buy the first pullback after insane strength. That's what happens here. The RSI barely closes above 70 at 70.1, but this candle is red. Once again, it did have news, so this strategy is a go. Once again, you have to make sure of that yourself. Then you go ahead and get long exits. Pretty simple. If the entry price plus ATR multiplied by 3, if we cross that, we sell at that level. If the entry price minus the ATR multiplied by 1, if we cross below that, we sell at that level. So sort of just a built-in 3-to-1 risk reward on the trade based off of the average true range indicator. You can see a couple of wins here on CAPR this morning after a nice little move from the news it received. Next, let's do a really fun one. This is my moving average crossover strategy, which, unless you're brand new to active trading, you've seen before. Maybe the most common strategy, but I've turned mine kind of fun. See, mine is never not in a trade. I have the 50 simple moving average plotted as this cyan line, the 200 simple moving average plotted as this salmon line, and once the 50 crosses above the 200, it gets long. Then when the 50 crosses below the 200, not only does it sell that long, but it also enters a short, at which during the next cross, it will exit that short and enter back long. Couple of bonus points here too. If you go ahead and get this code yourself, I've made my code very customizable. Say you don't want a short, Trey, I'm not a short trader, I don't like shorting. You can simply turn that off in the settings of the code. I'm showing you this on the daily chart as a swing trade strategy. You can make it a day trade strategy. Simply turn that on and then hop down to the day trading time frame that you would like to test this strategy on. Also, from within the cog here, you can change the moving average length. So for day trading, I might want to make it shorter, something like, I don't know, I'm just going to test here real quick, 25 and 50. Shorter time frames probably work better for day trading. So just kind of, it's a simple moving average crossover strategy. You've seen this before, but mine is kind of fun. My interpretation of this strategy, I think, is kind of fun. Next up is my high-low swing trade strategy. There is this study called the HiLo Activator. And what it does is it plots the moving average length based off of whatever input you give it. I am running it at a length of 25. And if the price is above the high of the 25 SMA, so the simple moving average based off of the high of the last 25 bars rather than the close, what the indicator will do is it will then flip the simple moving average to be the low of the last 25 bars. Does that make sense? Then, of course, when we cross below the low of the last 25 bars, it flips back to the high. And I have simply built a strategy around that, around the 25 length high-low activator. When we break above the high 25 simple moving average, get long. When we break below the low 25 simple moving average, get stopped out. That's the strategy. Relatively simple. I'll click through a couple of the familiar names we've been clicking through. Take a look once again at my custom back test study code up here if you want to see how it performs. I'll even look at some stocks that maybe aren't just so well performing. So you can see strategies still do well even on, not necessarily the best stocks in the world, right? Next up is my RSI Dip Scalping day trading strategy. This is run on the 1 minute chart as it is a scalping strategy. And as the name suggests, you will just need the RSI indicator turned on. However, since this is a scalping strategy, I change the parameter of the length within the RSI study from its default 14 down to 4. I want the RSI study to be moving faster along with the scalps I'm looking to take. The strategy itself, relatively simple. When that 4 length RSI is less than 15, you are going to enter, and much like the other reversal strategy, except now since we're scalping, rather than it being up to 10 times, it is up to 3 times, we will enter. So as long as that RSI value, once again, is below 15, up to 3 times, you buy. Then what we're looking for profit is for the current bar to close above the highest point or equal to the highest point in the last 2 bars. So it ended up not selling for profit here because this bar ended up closing at 121.3, whereas 2 bars ago, the high was 121.31. Wow, actually, that's hilarious. The high was 1 cent higher. But still, hey, it didn't end up getting out. Did end up getting out on this candle because, of course, it closed above this high and this high. Now, stop loss. If we are in the trade and the RSI, once again, 4 length RSI is above 20, but we are still red in the trade, we go ahead and exit that trade as a stop. That is an RSI divergence, right? The RSI is moving up, but the price is still moving down. We utilize that RSI divergence to go ahead and get ourselves out of the trade. Now, one more thing to talk about with this strategy is it's a scalping strategy, right? So scalping really thrives in areas of high volatility. So I have built a scanner that just simply returns me stocks with high daily beta values. Beta is a statistical measurement of volatility. The higher, typically the more volatile. So you'll want to build yourself a scanner like this, or, make sure you're subscribed and check out some of the videos I've already made on this scanner, and then make sure you are running the testing of this code against these sort of stocks, as once again, these sort of stocks with high volatility are where a scalping strategy is going to thrive. We have made it to our final strategy we'll be covering in today's video. I've thrown a lot of information at you all over the last 25 minutes. I wouldn't blame you if you had to watch this video back to really absorb it all, but hopefully you've learned a lot. Hopefully this has changed the way you'll look at the market, given you a lot of ideas to run your own testing on, to plug into your own trading systems. But the final strategy is going to be my Chande momentum oscillator strategy. I'm currently doing a series on my channel where I'm exploring sort of uncommon indicators that people don't really use. And I came across this one, the Chande Momentum Oscillator. And the very simple premise of it is that if the value is above this 50 line, or the 0 line, we are in uptrend. And if it is below that 0 line, we are in downtrend. So I simply built a strategy that longed when we crossed above the 0 line, sold when we crossed below the 0 line. And it actually works pretty well. I mean, is it the best strategy you'll see today? Probably not. But for just how simple it is, built off of one kind of indicator that you've probably never heard of before. I'll just click through some names here and you can look at the statistics. They are pretty, actually looking at these statistics, and I always love to compare the total P&L with the max drawdown. This actually might be one of the better strategies I've clicked through on some of these stocks that we've looked at today. That might be interesting to watch back with this video, but that's the final final strategy using this Chande Momentum Oscillator indicator. That's a mouthful. If you've made it to the end of this labyrinth of a video, you're obviously interested in this objectified, systematic approach to trading. So I want to reward you all for making it to the end of my videos and help give you a little extra push to get you into system trading. It really changed my trading career forever. So right now on my website, if you use discount code END, you'll get access to all of the strategies you've seen today, more strategies, custom indicators, custom scanners, all for just $15 for your first month. I do have it set up as a subscription, as I am always adding new codes. But of course, if you want to cancel, you can with just a few mouse clicks at any time under the My Account tab. So click the link in the description down below. Go get access to over 60 codes today for only $15 using discount code END. And just so my lawyers don't pull their hair out, I have to let you all know, nothing in this video guarantees you any sort of profit. The backtest results you see today are not guaranteed moving forward. Using these strategies have no guarantee of making you any money. The point of backtesting is to prove statistically what has worked. So what is more likely than not to continue working in the future. But of course, this is trading when you are on the wrong side. And of course, you see even in this video, there's a lot of losing trades. It just works over a long enough time frame. Losing money, definitely possible. Please just take the ideas that you learned in this video, test them yourself, and apply what works best into your own trading system. That's the point of these kind of videos, not for you to just go blindly start throwing real money, your real hard-earned money, into a strategy just because you heard some mostly albino guy talk about it on a YouTube video. So please be smart, be safe, take this information and test it.